Hello and welcome to my channel A-Level Guide. In this channel I will be focusing on the subject accounting and paper 3 specifically, which is taught in the second year of the A-Levels. Today I am going to be solving the paper February March 2021 variant 3-2. So without wasting any time, we'll jump into the video and look at the first question. So I have now listed out the points regarding the topic business purchase and merger, as the first question is related to it. So I have written the purchaser point of view and the seller point of view. So these are the important points that you need to have in your mind before you start on the question. Seller point of view is the one who's going to be buying the business. Is it a partnership or a sole trader or even a company? So he is supposed to fulfill all these three requirements when you're solving the question. So first of all, he has to adjust the loan with the debentures. So if for instance a partnership is having a loan previously and the company bought it, so now he is supposed to issue the debentures instead of that loan. Secondly, he is going to calculate the purchase consideration, also known as the purchase price. Purchase consideration is the price that he is supposed to pay to the person or the company buying it. So the purchase consideration can consist of all the debentures he is issuing, or the ordinary shares, or something else that he is either also paying in cash. The third one is that he has to record the breakup of the purchase price. Like I told you, it can be cash, debentures, the ordinary share, the share premium with the share premium. So that is how the seller point of view will be recorded. Moving on to the purchaser's point of view, we'll be first of all calculating the purchase price, the price that is going to be paid to the company for as he is going to be selling the company to the one. And then he will also calculate the breakup of the purchase consideration as mentioned above. He'll draw out the new balance sheet of the new company, which means that he has also bought another business. So he'll be making a new balance sheet listing all the assets and capital again with the new value consisting of both the businesses. And lastly, we're calculating the goodwill. Goodwill is a very important concept. Goodwill is an intangible asset which the business records. It is the excess of the net book value of assets. So it is calculated with purchase price minus net book value of asset. So that is the main concept of this topic. Now we'll look at the question and understand it, and let's solve it. Here is the question number 1, which is related to P Limited, a company that has taken over a sole trader business. So first of all the assets and the liabilities, a balance sheet full-fledged is given to you of both the companies, for both the businesses basically. So they acquired all the assets on 31st January 2021 except the cash at bank, which is 11,000. So these are the few things that you need to underline when you're supposed to doing the question. Next, they have given the things as follows, which needs to be adjusted in the balance sheet. Property, plant and equipment would be 25% above the net book value, which means the amount needs to be calculated with a 25% increase. Provision of doubtful debt needs to be calculated. 4% will be charged on the trade receivables. Inventory would remain unchanged, which means there is no change in their value, and cash discount of 4,000 from trade payables would be expected. Apart from that, they have given the purpose of acquisition. It means this is the purchase consideration, or you also call it purchase price. So it is basically the breakup that is given. Ordinary shares are valued at 1.50 per share, which means they're issued at a premium. We have taken over a motor vehicle which was initially at a net book value of 20,000 but was taken over at a value of 28,000, which means there is 8,000 realization profit, which would be adjusted later, and cash 60,000. So this is all the information that is given. And now we'll look at the question number 1, A part, which says what is explain how purchase goodwill may arise. So purchase goodwill is basically when you buy another business. It is the cost of acquisition, and it is the cost of acquisition or the excess of the fair value. This is the basic definition, which is also written in the marking scheme. This is the basic definition that you need to learn when you are also preparing for your exam. We'll look on to the calculation part. The B part basically is calculate the amount of consideration payable by P Limited to Iran. So for the A part, it is clear that it is the cost of acquisition and it is the excess of the fair value of the net book value of assets too. Alright, the B part states that you are supposed to calculate the consideration payable, which means that you're supposed to calculate the purchase price. They have already given you the breakup, it's just that you're supposed to calculate. So the calculation will be as follows: 300,000 into 1.50, which is basically 450,000. The next thing that they took over, this was basically ordinary shares. The next thing that they took over was a motor vehicle at a value of 28,000. So the business purchasing this will be recording at 28,000 because it was taken at this value and not 20,000. The last thing that they paid was cash, 60,000. If you add them all, it is a total of 538,000. So this is the total purchase price. According to the steps I gave you below, the summary, it also listed that you're supposed to calculate the purchase price or the purchase consideration. So it is as follows. Now look at the next part. So the next key part requires a statement of financial position to be drawn, which means that you're supposed to combine all the assets and liabilities of both the businesses. So first we'll start with the non-current assets. As stated, they said that there's going to be a 25% increase in the value. So which means earlier it was 244,000. You're supposed to calculate the 125% on it, which is supposed to be 305,000. The non-current assets of the P Limited business originally was 935,000. You add 305,000 and they took over a motor vehicle which was basically 20,000. So the total value will be 1,220,000. So non-current assets not only include property, plant, equipment, but also the goodwill, which is an intangible asset. So for calculation of goodwill, the formula that we use is purchase consideration minus the net book value of assets taken over. So hence the purchase consideration that we calculated was 538,000, and now we will be calculating the net book value of assets. So first of all, we have the property, plant and equipment, which we calculated as 305,000. We have inventories which are unchanged, which means it is 63,000. Now you're going to extract all the data from the question and list down here. The trade receivables were to apply, you are supposed to do the working. So 125,000 were the trade receivables, and you're supposed to apply a 96% because 4% was provision, and hence the value will be 125,000. And then you have the trade payables. Trade payables are always subtracted from the calculation of the net book value of assets. So 69,000 were the total trade payables, 4,000 you received discount, hence it is 65,000, and that is supposed to be calculated. After the calculation, you receive a total of 115,000. Now after the goodwill adjustment, we are supposed to move towards the section which is the current asset section. First of all, we'll write the inventory. You are supposed to combine all the inventory of both the P Limited and the one business. So it is 195,000 plus 63,000, which is a total of 258,000. Then you have the trade receivables. Here you will write the adjusted value, which means 312 were the existing trade receivables of E Limited plus 120 were after a 4% discount or provision, which is 432,000. And then lastly you have cash and the cash equivalents. Now you need to remember that P Limited paid 60,000 to the business, which means that you're supposed to subtract 60,000 from the cash equivalents. 213 with existing minus 60,000, which means 153,000 are the cash. The total of the current asset section is 893,000. So the total of the asset section, non-current asset plus goodwill plus current assets gives you 2,178,000. So this is the total assets. Now you'll match off against the capital and the liability section. Now moving on towards the equity section, we have share capital. 1200 was already with E Limited. They issued 300 more ordinary shares. So this is without the share premium. They issued 300,000 ordinary shares at $1 each. So they are 300,000, total 1500,000. Then we have the share premium account. The excess of ordinary shares that was calculated was 300,000 into 0.5, which is basically 150,000. Then you have the general reserve. There were no changes in general reserve, so they will be written as it is, which are 90,000. And then we have the retained earnings. So for this, you need to do the calculation. As I mentioned, 169,000 were the already existing retained earnings they had, and 8,000 was the revaluation they took. Like they took the motor vehicle at a value of 28,000 and not 20,000. So it tends to be 177,000. So total of the equity section is 1917000. Now we'll be more. Lastly, we don't have any non-current liability, so we'll only be recording the current liability. Current liability is only trade payables that we only have. The existing trade payables were 196,000. And there were 65,000 of the other business after 4%, after 4,000 discount. So the total will be 261,000, and hence the total of non-current liabilities plus the equity section plus the current liabilities will be 217,800. So hence your balance sheet is now balanced. We'll look at towards the D part. So the D part says explain how acquiring one's business can bring the benefits to be limited. So it is a 6-mark question. It's better that you write 6 points and elaborate them accordingly. So I've just written 6 points randomly that I thought. You can also refer to the marking scheme and your topic briefly. So first of all, you can benefit from economies of scale because you're now going to be merging the business, hence you will be benefiting from the lower average cost. If you've studied economics, you will have better knowledge of that. Secondly, you can earn higher profits because of increased sales and reduce your operating expenses. Thirdly, you have established business name, which means the synergy effect will be there because you are now taking over a business which existed for a long period of time. You have established existing customer base will be there. You have good relationship with the supplier, which means that you can be able to hold off this discounts or bulk buy discounts can be availed. And lastly, access to non-current assets, which means the worth of the financial position of your business will be more strengthened. Now the second question is related to non-profit organization. So here's a short summary of that. So first of all, you're supposed to draw a statement of affairs. Statement of affairs is basically to calculate the opening capital, or which you say as accumulated fund under this topic. And so non-profit organizations have different terminologies as compared to the profit-making organizations. For instance, receipt and payment account is basically a bank account, which is also and then you have statement of financial position. But under non-profit organization, it is stated as statement of affairs. So you're supposed to calculate not the capital, but we say as accumulated fund. So it is calculated through assets minus liabilities, which is basically capital. The next we have is you're supposed to make a receipt and payment account. Receipt and payment account is basically the summary of the bank account. Bank account has debit and a credit side. Debit side is basically the receipt side, whereas what you receive as in, for instance, rent or something as income or subscription will be recorded on the debit side, and on the credit side you write on all the payments. For instance, you have electricity, utility bills or other expenses to be paid. Then thirdly, you're supposed to draw ancillary. You have to calculate ancillary activities, which are basically you have to calculate sales. For instance, if you are given opening and closing trade receivables and the sales value is not given, you will be making the T account and calculating the sales. Then same way you can calculate the purchases through the trade payables account, and then you can also draw up an account for the expenses and incomes. Like for instance, you can make an expense account for the electricity and make up an income account for rent if you have supposed to receive it. And lastly, you're supposed to make a trading account, which is the profit and the loss account, which is basically an income statement under a profit making organization. Then we have 3 more steps, which are basically the subscription account, income and expenditure account, and the balance sheet. So subscription account is basically an income account. Income account matlab is where you record all the income. It is the subscription that is received from the members of the organization. So on the debit side, you're supposed to record accrued brought down. Accrued is basically something that is left to be paid. So something, the amount that is left to be paid from the last year, which is carried forward to this year. For instance, a member was supposed to pay, for instance, $50 last year, but he didn't pay it. So now it will be carried forward and will be recorded on the debit side as 50. And the other one is the prepaid brought down. Prepaid brought down means that something that has been paid in advance. For instance, a member that has paid 50 for the next coming year, so that will be recorded on the debit side, and so the carry down and the brought down accordingly. Then on the debit side, we have the income and the expenditure account. So this is the account where you also write all the incomes and the expenses, and on the credit side, you record back the amount that you have received for the current year. The fifth is the income and expenditure account, where you list down all the incomes and the expenses, and you calculate either a surplus or a deficit. So these are the terminologies used under non-profit organization. Lastly, you will be making the balance sheet, or in the new terminology is the statement of financial position, from which you will be recording accumulated fund. This is something that is being added apart from the profit making organization. This is the only change. You're going to add surplus of income, which will be calculated from the income and expenditure account. You're going to add donation, and you're going to add life membership, which is in advance if it has been paid. So the trading account that I already previously told you was basically a shop trade. For instance, there is an organization XY Limited and has a shop under its organization. So the profit and loss that shop is going to make will be recorded in the trading account, but under income and expenditure, all of the expenses and income will be recorded as a whole organization and not a part of it, as shop is only a part of an organization. So now we look at the question and understand that. So for 2019, you're supposed to record the remaining. For instance, statement of financial position states that the subscription that is paid for over the 5 years, you're supposed to record the ones that is left. So it records the amount that is supposed to be credited over the statement of financial position and not that is used each year. So for this, you will be doing 4/5 of 6,500, which is basically 5,200. And for the next year's 2018, you have a total of 4,000, and you will be giving only 3/5 of 4,000 in the statement of financial position, because for the 2 months you have already used this. You have credited over the income and expenditure account. For the remaining 3 years, you will be giving it to the statement of financial position, which will be 2,400. Likewise, for 2017, it will be 4,500 over 2 into 5, which is basically 1,800. So from 2017 to 2019, you have 1, 2, and 3 used. So only 2 are left out of the 5 equal installments. And then for 2016, you have a total of 2,000, for which 1/5 will be recorded under statement of financial position, which will be 400. And we will not be including the last year 2015, because if you count from 2015 to 2019, all the 5 years have been used, so there is nothing left to be recorded in the statement of financial position. Hence the total will be 9,800. Now moving on towards the next part. So for the B part, you're supposed to list down the differences between the receipt and payment account and income and expenditure account. So the receipt and payment account only records cash items. For instance, any cash that you have paid or any cash that you have received. Whereas the income and expenditure account records both the cash and the non-cash items, which means depreciation is also taken account, which is a non-cash item. Then it records both the revenue and the capital items. Whereas the income expenditure account only records the revenue items, which means anything that you've received and not the capital items. For instance, if you've purchased a motor vehicle, you'll not be recording under the income and expenditure account. And thirdly, you have the opening and closing balances on the receipt and payment account, like for the cash in the bank. But for the income and expenditure account, you'll only be having the transfer of surplus of deficit to the accumulated fund and not the opening and the closing balances. So the D part is very easy. It requires only the knowledge of your concept. For instance, it states that explain to your treasurer with reference to appropriate accounting concepts, accounting treatment of the special donation in the financial statement of the club. So as we know that there is a rule concept that you must have studied in AS. It is where the income is recognized in the period which it relates to. So a matching concept, which is also known as the matching. Matching means you're supposed to match the expenses against the incomes of that specific period. And you also have the other concept, which is the prudence concept. Prudence concept actually states that you should not overstate your assets and profit, and you should not understate your liabilities and losses. So hence you should ensure that income and surplus is not overstated. Hence your special donation for the 2022 should be recognized in the income and expenditure account for that year, because that donation will be matched off against the expenses of that year, and hence it should be recorded as income in 2020 in the statement of financial position. Now for the D part, you're supposed to prepare income and expenditure account. Hence first we'll be drawing out the subscription account. We need to adjust the income. So first of all, we have that member subscription in arrears in 2019, which means that we have accrued brought down. So accrued brought down will be 3,800, and then we have an accrued carried down, which is 1,800. We also provided that member subscription was in advance. In 2019 we have 2,700, that is going to be our brought down, and we have a carried down which is 1,100. Further, it is mentioned that you have received 73,000, as it is written in your receipt and payment account. It is written as member subscription 73,000. Receipt and payment, as I already told you, is a bank account. So hence you will mention bank and 73,000. So this will now be your missing figure. So we have the subscription amounting to 7,600. So this will be recorded in income and expenditure account. So again, you're supposed to balance this off, and you're going to bring the brought downs down here. Now we'll be drawing the administrative account, because we have to adjust the expenses also side by side. So under the administrative expenses, you are supposed to have the brought down, which is on the debit side, 4,200, because this was basically prepaid at the year end, and now it is brought down from 2020, 4,200. Then you have the administrative expenses accrued at the year end, which means it will be carried down here, 650. It is an opposite of the income account, and hence you have 46,000 here, and you have 46,000 from the bank that you have paid. And now you will be calculating the income and expenditure account, which will amount to 50,850. Then we have the clubhouse expenses. On the credit side, we have the accrued clubhouse expenses at the year end, which will be brought down in this year, and then you have the bank payment, which is basically 37,000, and you will calculate the income and expenditure account balance as 34,340. So we have adjusted this. Lastly, we are supposed to now look for the depreciation, as they provided information related to the club equipment. So for this, it is mentioned that the cost for depreciation is 88,000. Now the thing here is that you need to remember that in the receipt and payment account, we also include non-cash items. For instance, it is written that there was purchase of club equipment, which means that we need to include that in the cost of the club equipment. Hence, it will be plus 24,000, and at the year end, the value was 52,000. After calculating this, we get the amount which we will be applying to 20%, because they said you're supposed to apply 20% reducing balance method. So the depreciation charge for the year will be 12,000. Now we're done with the working. Now we'll assemble this all and make an income and expenditure account. For the income and expenditure account, now we'll be going to list all the incomes and the expenses. So now first we list all the incomes. We calculated that there was subscription, which is basically an income. So we calculated the amount as 7 to 600. Then we had life membership fee. If you remember, we did an A part, which was life membership. Now in this is a part of income and expenditure account, which means the only current year subscription or the membership fee will be recorded, which means that in the receipt and payment account we have 8,000. We'll take 1/5 of this. So 8,000 into 1/5 is going to give you for that year. So you were supposed to calculate 1/5 of each of the part. That was for the statement of financial position. This is for the income and expenditure account, which means that you need to calculate only 1/5 of each of the years. So you can do it combined and also separately. So I think combined would be more easy, and you can do this in one go. So 8,000 plus each year you're supposed to add, which is 2,000 plus 4,500 plus 4,000 and plus 6,500. You can take the 1/5 of all these amounts, which will be included in income and expenditure account, as they stated that it will be distributed equally over the 5 years. So the amount gives you is 5,000. And now one more thing that you need to take into account when you're reading the question is that you need to carefully read that during the year ended, a item fully depreciated due to club equipment, which at original cost of 8,000 was sold for 2,200. Now you would say that we can find the depreciation and then you can no, it says that it is fully depreciated, which means that it has no depreciation and the cost is equivalent to the depreciation. Still it is sold for 2,200. Do you understand? It says that the 8,000 is the cost of the asset. It is fully depreciated, which means it has fulfilled all the years it was useful for, and now it has been sold for 2,200. So 2,200 is the profit that you've gained out of a thing which has no value, basically, because it has fulfilled the useful life of it. So it will be recorded as profit on sale of equipment, which is basically 2,200. Apart from this, we have no other income, so hence we will total the income section, which will be 7,9,800. Now we'll move on towards the expenses. For the expenditure part, we calculate the clubhouse expense. We made the T account and we calculated the amount as 3,4,340. Then we have the clubhouse depreciation, which amounted to 12,000, and then we calculated the administrative expenses. We also made the T account for this and it was 5,850. So the total of the expenditure is 97,190. We calculated the incomes as 7,9,800. It will subtract the expenditures from them, and we have a deficit for the year 17390. So basically this is the deficit, or you can say the surplus of expenditures over income, and this now will be adjusted in the statement of financial position. Now for the cumulative fund, we will be calculating through assets minus liabilities. We'll be listing all the assets and liabilities for 2019 and calculating the cumulative fund. So we have equipment at cost 88,000. We'll subtract the depreciation because it is always recorded at net book value. We have subscription, which is in arrears. So you're going to add that, this is basically included under current assets, which is 3,800. You have the value of bank, or you can say cash, which is 3,200. Now at the liability section, also we are forgetting one thing, which is administrative expenses, which were paid in advance, because we record the prepaid expenses under current assets, which are 4,200. Now at the liability section, we have the life membership fee, which is 9,800. We calculated in part A. We have the member subscription, which was paid in advance, so we record the prepaid income under current liabilities, so which is 2700, and we have the expenses which were accrued, that is 2660. And now you can add all the assets minus the liabilities, and you can get the cumulated fund as 32040. So this is the cumulated fund that you were asked to calculate. So with a simple formula, you just need to add in the figures and calculate it. In this part they state that you need to December 2019. So now you're going to make the changes. For instance, you were recorded a deficit in the income expenditure account. You can go back to the notes that I taught you in the very start of the video, that in the cumulated fund we add or subtract the surplus or the deficit, any special donation and life members share. So now we're going to less the deficit that we calculated in the income and expenditure account, that amounted to 17390. So this is according to the format under non-profit organization. And then as it is also stated in the question, there was 6000 that was for the anniversary. So it is a special donation, it is for a specific purpose, so hence it will be transferred on to the balance sheet or the statement of financial position. So it will be transferred as anniversary fund, which is basically for a specific purpose, and you're going to subtract that, and you're going to be left with the accumulated fund at the year end, which is for 2020, which is 8650. So we're done with the question 2. We'll now move on towards question 3 in the next video.